Hello guys, it's Dale here with a new day trading analysis. Today I'll talk about US dollar, Japanese yen, but before that a little recap of trades from this week. That means trades based on the videos which I sent to you since Monday. I publish all those on the trading view, so let's check them out real quick. The first one was on the Australian dollar, Japanese yen. This was the prediction based on this rejection setup and those volumes here. If I scroll forward, this was the reaction. Not so precise, but still, if you used stop loss above this swing point, that's where I place my stop loss, behind heavy volume zone and above swing point, that's how I do that, then it would be a winner. The price in the end reacted and made it into a nice sell-off. So that was the Australian dollar, Japanese yen. The next one was on the euro, British pound. Again, the setup was the same, the rejection setup with volume cluster here, the resistance was in here. So if I scroll forward, then you can see that in here, this was the reaction to that level. Again, the price overshot the level a bit, but it didn't go past the stop loss, which was in here. Now, the next one, New Zealand dollar, Canadian dollar. We had a support in here based on a trend setup, based on those volumes within the trend. And if I scroll forward, you can see the reaction, which in this case was pretty precise. It was in here. Now, the last one, Australian dollar, Swiss franc. That was prediction from Tuesday, and in here we had the rejection setup again. This was the rejection of lower prices with significant volume cluster. This was the support, and if I scroll forward, then right here, this was the reaction to it. Right, so those are the trades from this week. And as I was saying, today I'll do a US dollar, Japanese yen analysis. So let me switch over to that chart and let's take a look at what we have here. The US dollar, Japanese yen, there was a rotation followed by a strong trend activity. If you see this, then what you want to do is use flexible volume profile to look into the rotation area to see how volumes were distributed there. You need to see heavy volumes within the rotation, like those. And this is telling us that buyers were building up the long positions here, right? Buyers, because there was that buying activity afterwards. So those buyers were building up the long positions here, and then they pushed the price aggressively upwards. Now, when the price retraces back to that heavy volume zone, then it is likely that there'll be a reaction, as the buyers from here will want to defend this zone, right? Because this zone is clearly important for them because they placed a lot of the longs there. The beginning of that heavy volume zone is in here at 138.54. So this is where I think the reaction is most likely to happen. So if there is a pullback to this level at some point in the future, then chances are that there'll be a reaction. I'm not saying that there must be this pullback, maybe there won't be this pullback. But if there is this pullback at some point in the future, it doesn't need to be today, maybe it will happen next week or the week after that. But when this happens, if it happens, then chances are that there'll be a reaction. All right? Just be careful you don't trade this support during significant macro news, because that would be pretty risky. Alright, so that's the support based on this volume profile setup. The setup is called volume accumulation setup. It is one of my favorite volume profile setups. By the way, if I move this flexible volume profile over here so it doesn't block this weekly profile, if you look at this weekly volume profile, it shows how volumes were distributed throughout this whole week. You can see that the weekly point of control is actually here, which means that this week the heaviest volumes were traded at this level, at our support. So that adds strength to our level, alright? Because it is a weekly point of control. Now one more thing I want you to notice here is how nicely the price reacted to that first deviation of a V up here. That first deviation usually works as a support when the price moves above it, like in here. Price is above the support, I mean above the first deviation of a V up, makes a pullback, boom. This is also one of my trading setups. This is a VWAP trading setup, alright? But anyways, today I wanted to show you this support, 138.54, alright? So we just need to wait for a pullback and take it from there. Now, if you guys are interested in some more trading education, then what I recommend is visiting my website. This is it, trader-dale.com. And if you go to the videos section, then there's a new video, a recording of a webinar, which I had on Tuesday. This is the webinar. I recommend checking it out. And at the end of the webinar, I made a special offer to all the people who watched the webinar. And the offer was a special discount on my order flow pack, which is an educational and indicator pack that will teach you how to trade with order flow. You can find it in here when you click trading course and tools. Scroll down a bit, and this is the order flow pack. It includes my custom-made order flow software, a video course on order flow trading, and also my custom-made volume profile indicators. As I was saying, I discounted the price of this whole pack to $397, but the discount will end in 6 days, the 31st of May. Alright, so that's about that special deal I offered to everybody who watched the webinar, and I also offer it to you. So check it out, and I'll be looking forward to you joining us. Alright, so that's about that. That's about the video. Thanks for watching, and I'll be looking forward to seeing you next time, and until then, happy trading.